Hello everyone, and welcome to not the daily market health analysis, but the explainer for the daily market health analysis, and specifically the short explainer that tries to get across the concepts that you need to understand to be able to read those charts and make use of them yourself. I've realized that I've been looking at those charts for the last few months. I get them. I don't feel the need to explain them to myself, but other people might be new to this. So this is the video to get a quick 5 to 10 minutes overview of what those stats are about. So without further ado, let's just jump right in. The most important chart, actually, the underlying chart that you want to be aware of is this 6-hourly sales count. You'll notice that at least for now, there's no time scale on the bottom. That's because it's just 14 days, which means that about halfway through you're 1 week in and about the whole way through you're 2 weeks in. That's why I haven't bothered putting a time scale on this. These are sales counts. It says here sales counts. So this is the number of sales for a bunch of top projects. These are the projects in the top 10. You can see the colors map to a specific project. Each separate color is a different project. We've got projects that I've selected to be part of the top 10. CryptoPunks, Bored Ape, CyberKongs, Mutant Ape, VFriends, Guttercat Gang, The Doge Pound, Creature World, Cool Cats, and Pudgy Penguins. Why did I select those? Because I believe that they tend to be representative of where the market is going. And so I want to track where their volumes are because I believe that that will lead the market. And so when the volumes increase in these projects, eventually the volume increases in the other projects. And when volumes increase, prices increase as well. Over here, what we have is every 6 hours, the sales numbers for each of those projects added up in a stacked bar chart that tells us roughly how much sales activity is going on across those 10 projects. This is on a 2-week timescale, 14 days, it says at the top. We can also occasionally look at longer timescales. This is 45 days. There is a timescale at the bottom this time because it's long enough to need it. Here you can see the late January pump where there was a lot more volume than there is now at the time of this recording. Here you can see an even longer timescale of 90 days. This shows the early January bull market. You can compare that to the late January bull market and see that as far as the top 10 are concerned, this was a much lower amount of volume than in January. We can even look at a much longer timescale and see the Jimmy Fallon pump here when Jimmy Fallon bought an ape and Macy went apeshit, I guess. The volumes went up and you can see how short-lived that was. And this gets to the point. This is why I'm measuring these charts, because I want to see whether the volumes are sustained or whether we're going back into bear mode. When it comes to the Jimmy Fallon pump, which is roundabout when I started doing these charts, it told me immediately that, yeah, okay, there was strong volume for a few days, but then it went straight back down to bear market levels. So I knew that this was not a sustained pump. This was not going to lead to a bull market in November and December, and I was right. The another thing that it tells us is when the volume is increasing, it shows us that we are heading into a bull market, and that was visible here from mid-December onwards and showed us that we were heading in towards a bull market in late December and early January. And that was then borne out by the facts on the ground. But one thing that this chart doesn't do very well is it doesn't show trends very easily. It doesn't really allow much trend spotting. It's also quite complicated. Most people feel like this is a bit overwhelming. They don't know how to read this information. So one thing I did was try to turn this into a simple 0 to 10 index, which is what the market health index is about. So let's go straight into this. So here we have the market health index, which is the main chart that I tend to look at in the market analysis update. This is based on the same data that we just saw. So this is 14 days. This is 14 days. They're both the same time scale and they're both showing effectively the same data. The big difference is that this one does things to the data to make it easier to spot trends. For example, when you look at this chart, it's difficult to tell what exactly the market is doing, where it's trending. It just looks like it's sort of randomness going on here in a kind of bear market type level. Whilst if we look at this, we can see, okay, so it's sort of maybe forming higher highs, maybe forming lower lows. There's a change in this moving average. I'll get into that in a second. So it looks like a possible market turnaround. And we can see this fairly easily in this chart, whilst we can't see this easily in this chart, which is why I created this index. Now, what is this index made of? First thing to realize is that this chart is, the yellow chart is a moving average. I take the amounts that are here in these charts, even in the long-term chart here, in fact, in the longest term 1 year ago chart, and I normalize them from 1 to 10. So this is 10 and this is 0. And I apply a logarithm as well to try and make sure that all the activity is not just tiny little fluctuations at the bottom. So having applied a logarithm and normalized from 0 to 10, I then take a moving average of those. That results in the yellow line here. The blue line is the same thing, but averaged over 7 days instead of 1 day. And the green line is the 30-day. The reason I do this is, again, to make the trend easier to spot. Otherwise, as you'll see in the deeper explainer video, without the 1 day moving average, this would be very jagged and much harder to spot. It would just be going up and down like this quite a lot, and much harder to spot what actually is going on because of the random point-to-point fluctuations. This is still a chart that records a dot every 6 hours. So the 1 day simple moving average is recorded over the last 4 data spots. When we look at this 14-day top 10, we can see some trends, but it's hard to tell what the longer trend sense is. Even harder than here because we don't even have the data. With this, it's harder to compare, it's harder to see what's going on. But if we then look at a longer time chart here, and please ignore the red line for now, we can now see much more easily the trends. We can compare things. We can see, okay, this was what happened in December. There was this kind of slow build up. These are the 3 peaks that happened in the late December bull market, the 2 peaks that happened in the late January bull market, the fire sale here. We can spot things much more easily than we could looking at just the stacked bar charts. We can spot those in the 1 day simple moving average, which is still relatively jagged, but not as much as the underlying data. We can spot this quite easily in the blue line, the 7 day moving average, which is much clearer about the trend, but is much more laggy as well because it takes 7 days to get to the same spot as the 1 day simple moving average. And we can spot the really long-term trend in the 30-day SMA. And we'll get back to that in the next chart when we look at the whole 1 year perspective. And also another thing that's added in here, which is a very recent addition, is the price. This is a price index that does not have a logarithm applied, but is normalized from 0 to 10 across all the top 10 projects. So this tells us the average price shifts across the projects that constitute the index. So we can see with this how the price shifts are following or not the volume shifts. And we can see, for example, whether like how quickly they're picking up and what sort of fluctuations they're getting as volumes pick up right now, for example. This enables us to test more hypotheses than we could if we didn't have the price index as well. The final chart is the 1 year version, which gives us the longest perspective that I'm interested in looking at. Here you can see that the green line is giving us the best long-term view, which actually shows us that there is a kind of long-term decline in the volumes across the top 10. This can be quite difficult to see short-term trends in, but it's quite easy to see the longer-term trends. So that's why it's also useful to have this chart. Now, when I do the daily report, I'm showing 4 different indices, and there might be more in the future, but there's 4 at the moment. And if there's more, just realize that they're going to be calculated in a similar way to what is going on now. What happens is there's the top 10 index, the Zeneca Old index, the Zeneca New index, and the Women-Led Projects index. Where do I get these indices? Well, the top 10 are hand-selected based on what projects I thought were leading the market. Zeneca Old and Zeneca New come from an influencer called Zeneca33, who's well worth a follow, I think. It comes from daily floor stats update that he used to do every day, where he used to give a kind of running commentary of what was going on across the different projects, including statistics about the floors of various projects. And he had 2 sections, one for all the projects and one for new-ish projects. When I was looking at how to measure the market, I thought, might as well go and reuse a selection, a hand curation that's already been done by somebody else. And I got access to this. And here's a spreadsheet where you can see the list of all the projects that are being tracked. And these are the projects that are also in these indices. You can find a link to the spreadsheet in each of my videos, including in this video. So if you want to look at it for yourself, you can do that as well. And here again, there's the new projects and there's the old projects. There's also the Women-Led Projects Index. And there again, I reuse somebody else's work because I'm quite lazy and I like other people to do my work for me. So here is Ali Sinclair, who actually helped Zeneca to put together the daily floor stats for quite a while. And here he's gathered a number of women-led projects and collated them into this list. I got in touch with him and I just copied the list as well. And that gave me the Women-Led Projects Index, which might change as well, might evolve as new projects come up and new projects get added to this. So then during the daily update, I end up looking at, first of all, the health reports for all these indices. I look at what short-term trends we can see across the indices. Then I also look at the bar charts because, as you've seen, that is the underlying data. So it's the one that's most sensitive to the changes in volume. It's always worth looking at this to understand why something is moving. In particular, if a single project is driving a change, I find it useful to notice that because that kind of change is often not sustained for the long term. Once I've looked at the short-term picture, I end up looking at each index in more depth. So taking the top 10, for example, that's usually the first one that I start with. I have these 4 charts in one. By now, they're hopefully charts that you're familiar with. You know what those moving averages are averages of. You know what the price line is. You know why there's those different timescales because they show different kinds of trends. And you know which line might be most useful to look at in each timescale. I then just do this for each of the indices, the top 10, the Zeneca Old, the Zeneca New, and the women-led projects. So how to use these charts? Well, the first thing to realize is that they are entirely arbitrary, and how you use the charts is up to you. What do I mean by arbitrary? Well, the selection of which projects to track is arbitrary. My choice to track the sales counts rather than the sales amounts, whilst I have justified it to myself, is just my subjective choice. My way of turning that into an index from 0 to 10 is also arbitrary and my subjective choice. I find these charts useful and I use them in a certain way. You should use them in a way that makes sense for you. And you should always make up your own mind about what you think this means and make up your own theories about what this means. That being said, here's how I use them. First of all, I look at the top 10 as the leader of the market. I have not yet seen evidence that this is not true. I find that was true in December, and it was true, it will probably be true now, and it was true before as well during the previous pumps. I look at the top 10 as the leader of the market, and I use it to answer a simple question, which is, are we in bear or are we in bull? And if we're in bear, I try to make fewer risky bets than if we're in bull. In bull, risky bets tend to come through more easily. In a bear market, they don't come through so easily. Beyond just the binary answer of are we in bear or are we in bull, there's also the question of, well, are we transitioning between bear and bull, and how soon will that happen, and what kind of impact will that have on prices and so on? And therefore, when should I buy? That's much harder to get an answer to. It's even more arbitrary than the other, are we in bull or are we in bear? But I find that looking at the changes of trend in the volume helps me determine, for example, right now we might be at a turnaround point where volumes have started increasing after basically trending down for the last month, potentially even longer if we ignore this bump at the end of January. I try to figure out, are we turning from bull to bear? How fast is it going to happen? What kind of impact might it have on prices? And when it comes to the impact on price, I should point out that this is very much unpredictable. We can see what happened here in December to January. That doesn't mean that that's what's going to happen now from March to April. It could go the same or it could go completely differently. In December to January, the prices went down before they went up, even as the volumes increased. Now they look like maybe they're going up already, or maybe they're just going up and then they're going to go down and then go up. We don't know these kind of things. It's important to remember whenever looking at these charts that they don't tell the future. They don't necessarily support whatever theories I speak about in my videos. You need to make up your own theories and make up your own mind about what these mean to you. The charts basically mean nothing, but the meaning is all in your head. So make sure you think about how you construct that meaning and make sure you construct your own meaning there. And the final point about how I use the charts is also I kind of tend to put them in context. I try to understand why a price movement might be happening. This one was when the war in Ukraine was declared. So I was able to explain that to myself as, okay, there's a kind of fire sale going on. People are just selling lots and lots of projects. This one I couldn't come up with an explanation for. This one was a long, steady increase in volume that the rumors was it was driven by Asian investors entering the market. It was basically a good, healthy bull market. So when there are shifts in the index, I try and understand why they might be happening. And one of the factors can be, for example, instability in the world, Ukraine, etc. It can be crypto pumping or dropping rapidly. It can be other factors that create uncertainty that make people want to invest in NFTs or not want to invest in NFTs. None of that is told by the charts, but what I hope the charts are useful for, what I hope you use them for, is to provide an additional data point that's maybe a little bit more objective than just hanging out on Twitter and seeing what people are saying about how they're feeling about the market. Because just because people are on Twitter, like they are right now as I record this video, complaining that we're in a bear market and it's time to tighten the belt and see who's going to stick around and so on, doesn't mean that's actually the reality on the ground. As we can see at looking at the charts right now, we are actually potentially hit the bottom of this bear and we potentially starting to trend back up. So actually, this is the time to start maybe considering what to invest in and picking the better investments for the next bull, rather than the time to quit and sell everything and say, okay, there's 6 months of bear coming, like, let's just leave now. It's often the case, I notice, that people don't really understand what is going on in the market because they just listen to people's emotions and to their own emotions rather than looking at the data. And my goal with these charts is to provide a data point that's based on actual data on the blockchain to help people make better decisions. But again, as a reminder, the decisions that you make, the meaning that you create out of these charts, that's up to you. I provide my analysis because I think it might be helpful, but you need to do your own thinking. And I hope you take that away from this video. Thank you very much for listening.